Welcome to another S&P 500 analysis. Today is July 8, 2022. The S&P 500 broke a 4-day winning streak on Friday with a modest 3-point loss. But for the last 4 weeks, the S&P 500 essentially unchanged. Is a breakout from this pattern forthcoming? In this video, we'll look at the market sentiment, the market internals, and the price action of the S&P 500, along with the other major market indexes, and see what they are telling us. Stay tuned. And before I begin, I need you to smash that thumbs up to help me promote this video on YouTube. And if you are looking for an objective, unbiased view on the market, then click on the subscribe to this channel. And be sure to click the notification icon to turn on notification so you won't miss any of my future videos. Now, just a reminder, be sure to watch my S&P 500 Trade Watch video, where I will give you some trade level to watch on the S&P 500 ETF, the SPY, the NASDAQ 100 ETF, the QQQ, and the Russell 2000 ETF, IWM. In addition, I will also present you with some level to watch for the coming week on Apple and Tesla, and a discussion on the E-mini S&P 500 future market profile and volume profile chart. So be sure to turn on the notifications so you will be notified when I have posted this video on YouTube. Looking at this weekly chart of the S&P 500, we notice the range for the week was 176 points. It gained a little bit over 74 points, 1.94%. It did form an inside bar here on a weekly basis, and it is continuing this one-time framing up. The one-time framing up definition is a higher low, essentially from one candlestick to another. And it closed underneath this declining 10-week moving average and also this declining 40-week moving average. It continue to bounce off this lower trend line of this declining price channel. It is still continue with this lower low, lower high price pattern. So there's not much change in terms of the technical and also in terms of the trend based on the price pattern and also the price action. The weekly trend is still down. Now let's take a look at the sentiment chart. Here on the VIX, we are still seeing the VIX inside of this 20-30 zone. Although it is coming down, but it is still in the middle of this zone and close out the week at 24.64. And also the put call ratio has basically been fluctuating, from high of near 1 to low just beneath the 0.75, and it closed the week at 0.81. So the market participants are still a little bit undecisive, or should they get real bearish, or should they get a little bit of bullish here. But right now it is still leaning toward the bearish side here on the put call ratio. And looking at the up down volume ratio for the New York Stock Exchange for this week, since this week is a short week due to the July 4th holiday, we see that the only thing that really showed some life was Thursday, and that was the jobless claim report seemed to help push the market on a positive tone there. Other than that, the other 3 days is pretty much flat, and we did see the advanced decline also show some strength on Thursday, with the advanced decline at 1,747 more advancing issue than declining issue, with an up-down volume ratio of 8.8 to 1 in favor of the upside. And interesting enough, if we take a look at the New York Stock Exchange new high, new low, we actually started the week with high number of new 52-week low. On Tuesday, it was 316, and only 4 stock make a new 52-week high. But other than that, for the rest of the week, it was relatively kind of flat here on Thursday and Friday. And notice on Thursday we have this relatively strong day, and not much happening on the new high, new low. The net difference was 47 more new 52-week low than 52-week high. And looking at the cumulative advanced decline line for the New York Stock Exchange, it's pretty much flat. We did see the S&P 500 close up throughout the week, except on Friday it closed down just down by a little bit over 3 points. But other than that, 3 out of 4 days was actually up. And in the NASDAQ market, it appeared that there's a little bit more life in the NASDAQ market than in the New York Stock Exchange. On Thursday, we did see a broad market participation on Thursday with an up-down volume ratio of 4.88 to 1 in favor of the upside, and also the daily advance decline with 2,314 more advancing issue than declining issue. And even on the Monday, we did see a 2.3 to 1 on the up-down volume ratio and 628 more advancing issue than declining issue. We did see a negative advance decline on Wednesday with more declining issue than advancing issue by a number of 700. But on Friday, it did finish positive with an up-down volume ratio of 1.45 in favor of the up volume. And the advancing issue outnumbered the declining issue by 437. And on the new 52-week high, 52-week low, not too much different than the New York Stock Exchange. We did see a little bit more stock making new 52-week low on Tuesday, with 477 stock making new 52-week low versus 20 stock making new 52-week high. Other than that, it's pretty much subdued throughout the week. Not much happening between number of stock or making new 52-week low versus number of stock making new 52-week high. And for the cumulative advanced decline line for the NASDAQ market, we see that the AD line is still below this pivot high, but notice the NASDAQ 100, it actually on Friday closed above this pivot high here. So slightly negative divergence here, so just be aware of that. So from the sentiment and the market internal, we're basically looking at the market participants still a little bit fearful, not bullish yet. They still are very cautious, and we are seeing a little bit more activity on the upside in the NASDAQ market. Now let's take a look at this daily chart on the S&P 500. As you can see, the price basically have gone nowhere the last 4 weeks. Essentially, it is unchanged. So for the coming week, we could see this gap could be get filled if the price break above this level here and move up to this 4,000 level. Then we probably will see this gap get filled and possibly get a little bit of a back test and then push up to maybe break this trend line and get up to the 4,200 level. Now on the downside is we could see this come down and break this 38.2 level underneath this 3,800 and possibly get a little bit of a back test and work its way down to the 50% retracement near the 3,500 level area there. Then we'll see what it work itself down to this 3,400 level, which is the pre-pandemic pivot high. That's the near-term scenario that we be watching. But definitely we be keeping an eye out for this 4,000 level next week for this potential gap fill or come down below the 3,800 level, breaking down below this 38.2 and possibly come and retest this low here. And looking at the NASDAQ 100 daily chart, similarly to the S&P 500, see that there is this gap here that need to get filled. So we could see that if we break above that and work toward this 12,500, then we could see this gap get filled. Otherwise, we look for a pullback back down to this 50% level near 11,768 here, and possibly do a little bit back test and work its way down back toward this 618 at 10,589 area. So essentially coming down to this 10,500 level. And for the Russell 2000 daily chart, we're also looking at this possibility of breaking above this level here, get above the 1800 level and possibly come up and fill this gap up here near the 1850 area. Or it could come back down and test this 1715 level, which is the 50% retracement, and maybe it will start working itself back down for the 618 at 1536. And looking at this Dow Jones Transportation here, we could possibly see it come back up to this 38.2 and come up and try to tag this 14,000 level. It could come back down, dip below the 13,000 level, and work toward this 50% retracement near 12,363. And for the Dow Jones Industrial, we also see there is a gap just above this 32,000 level. We're going to see would it come up and fill this gap and do a little back test and push up to the 33,000 level here, or would it pull back and come back down and test this 38.2 somewhere around 29,794, and then back down to this pre-pandemic pivot high near 29,568. And for the New York Stock Exchange Composite Index, we're essentially looking to see would it come up and test this 15,000 level once again, or would it come back down and tag the 38.2 retracement at 14,000 level, and essentially coming back down to this pivot high here on the pre-pandemic pivot high at 14,183. Looking at this 10-year yield chart here, this is the daily chart. As you can see, it pulled back, and on Wednesday actually dipped down to 2.746%. Then it started coming back up and finished the week at 3.101 after the non-farm payroll showed 100,000 more job added than what was expected. And that seems to give a little bit more leeway for the Fed to continue to hike rate in an aggressive manner. And that's the reason why we are looking at this 10-year yield coming up. So probably expect another 0.75% hike for July. That's basically what the market seems to be pricing in right now. And looking at the US dollar, remember we're basically looking at this 107 level here up at this trend line. And last week, the high was 107.615. So we could see that might get a little bit of a pullback here and maybe possibly come back down and test this 104, 105 area. And for the crude oil, we saw it bounce back from the 50% level earlier, and then now it is bouncing back up from the 38.2. So we're essentially looking for this 124 level here, this pivot high. And if you get up to this pivot high, then the next level that we'll be keeping an eye out on is the 130.50. That is essentially these highs up here somewhere near this 130 area. And for silver, remember we are talking about the ability to hold this 20.42. If it is unable to hold this level, then we are looking for the possibility of come back down to possibly near this $17.80 area here, and even possibly get down to this 17 level. So we're going to keep an eye on it to see is it going to come down and tag this 1780, and then see what this provide any support to get a bounce back up, or will it continue to dip down and look for the 17 area. And for gold, finally broke this trend line. Remember I've been saying that if it as long as it holds this trend line, then the trend is still pretty much on an upward trend. But right now we see last week it broke below this 1804 level, and now we are keeping an eye on this zone here between 1716 and 1677. You see we'll dip down to this area here and see could it get a bounce back up. Now let's take a look at the 11th sector in the S&P 500 relative strength chart here. First start off with the XLK, the technology sector. The technology sector has outperformed the S&P 500 last week. Healthcare slightly underperformed. Consumer discretionary a little bit outperformed. Financial underperformed. Communication a little bit outperformed. Industrial underperformed. Consumer stable underperformed. Energy underperformed. Real estate underperformed. Material way underperformed, and utility also underperformed. So as you can see from the 11th sector in the S&P 500, only the technology and the discretionary show a little bit outperformance compared to the S&P 500, and that is primarily due to Tesla in the consumer discretionary and the FANG stock in the technology, along with the semiconductor sector. So in summary, the S&P 500, along with the other major market indexes, it seems to be chopped around for the last 4 weeks, and it ended up where it pretty much started 4 weeks ago. So right now, we're basically looking at the possibility of a move either on the upside or on the downside, since the earnings season is coming up, and that should give us some volatility on the price action, and that will either move it up one way or move it down the other way. So looking at the relative strength chart, we did see the technology came back in last week to provide some support and hold up the indexes as along with the consumer discretionary. And those are basically the FANG stock, and Tesla helping out the consumer discretionary. And other than that, we got a little bounce on the semiconductor. Overall, most of the sector is still pretty much underperformed relative to the S&P 500. So be careful out there. I mean, the trend is still down, although a lot of people was talking about a short squeeze, but we will see some more downside. So be careful out there because I think there is still a little bit more downside to go, especially keep an eye on the pre-pandemic pivot high there on the S&P 500, somewhere around 3,400 level. And be sure to keep an eye out for the S&P 500 Trade Watch video that I will post before the Monday market open. So be sure to smash that thumbs up to help me promote this video on YouTube. Thank you for watching and stay safe.